Thank you for joining us at xn.com for this special report video. I'm Christina Marujos, and joining me today is investment analyst Marios Hadjikyriacos. We'll be having a look at the ongoing trade war between the U.S. and China, of course. It's been going for over a year now, and we recently saw things flare up again with Washington labeling Beijing a currency manipulator. Now, do you see things being resolved anytime soon?
Well, unfortunately, no, not really. And well, the argument is relatively simple, really. So up until now, Trump seemed like he wanted a deal. So you have US elections coming up next year. If he had hammered out a deal, that could be presented to his electoral base as a victory, let's say, so he can score some political points before the election. But now that narrative has been turned on its head. So I don't think Trump wants a deal anymore. I think he prefers to keep this conflict ongoing, heading into the US elections and, running on the I'm the tough candidate on China sort of theme, and also on the theme that any Democrat would mess up the negotiations, right? So I'm becoming more confident in the fact that Trump doesn't want to resolve this anytime soon, and in that sense, we may even see more escalation before very long.
Now, the trade war has pushed stock lower. Of course, it pushed safe havens higher. Now, if this continues, do you think we'll see some assets gaining and some losing? And if so, which ones?
Well, stocks are a tricky one because overall, the trade war and the uncertainty argue for lower stocks. However, here's the catch. Central banks are starting to ease their policy because of the trade war and the associated uncertainty. And looser central bank policy helps stocks. So we might see them take a hit from the trade war, but the stimulus from the central banks might offset part or all of that. Now, I think that a much better proxy to explore any uncertainty from the trade war is the yen. Well, all of the safe havens are the Japanese yen, the Swiss franc, and gold. They are all likely to gain, but I think the yen will outshine the rest of them. And here's the argument. Not only is the yen a safe haven, but since both the Fed and the ECB will start to ease their policy, while the Bank of Japan cannot really ease its policy any further because it's already stimulating as much as it can, that means that the interest rate differentials between the rest of the world and Japan will narrow in the yen's favor. So the yen has two, let's say, major factors of support behind it, and that could help it to gain. The franc could gain as well, but we know that the SNB is actively intervening in the FX market to weaken the currency, so any gains may be smaller in magnitude.
I see. And finally, do you see anything on the horizon that could make a deal likely, or is Trump going to keep playing hardball?
Well, he's definitely going to continue playing hardball unless the US economy weakens to the point where that might reflect bad on him or from an electoral perspective, right? So if you're heading towards the elections and the economy or the stock market starts to weaken materially enough, that could be the turning point where Trump really starts to make concessions and tries to get a deal. But we are not there yet, and we may not be for the next few months at least.
Marios, thank you for joining me today, and thank you for your very interesting insights. And thank you for watching us at xn.com.